Have you ever wondered how Ross performed in the third quarter of the fiscal year? Well, let's dive into it. Ross's sales and earnings exceeded expectations thanks to a favorable customer response to store values. The operating margin increased to 11.2% from 9.8% last year. This increase was primarily driven by leverage from same-store sales gain and lower freight costs. Earnings per share for the quarter were $1.33, compared to $1 last year. Net income rose to $447 million, from $342 million in the prior year period. Total sales for the quarter stood at $4.9 billion, up from $4.6 billion last year, with a comparable store sales gain of 5%. Looking at the year-to-date performance, earnings per share for the first 9 months were $3.74 on net earnings of $1.30 billion. So, Ross's third quarter performance was quite impressive, exceeding expectations. Now let's delve into the business highlights and expansion plans of Ross. In the third quarter, cosmetics, accessories, and shoes were the strongest performing businesses. The results were broad-based across all geographic regions. Additionally, DD's discounts saw improved sales trends during the same period. On the inventory front, total consolidated inventories were up 5% from last year, with pack-away merchandise accounting for 39% of total inventories. As for the expansion program, 2023 was a successful year with the addition of 43 new Ross stores and 8 new DD's discounts during the third quarter alone. Over the year, a total of 97 locations were added. Ross expects to have 1,764 Ross stores and 345 DD's discounts, marking a net increase of 94 stores. Ross's expansion program has been quite successful, adding a significant number of new locations. Let's now examine the financial overview of Ross and its guidance for the fourth quarter. This period saw a rise in comparable store sales by 5%, primarily due to increased customer footfall. The operating margin saw a significant surge, increasing by 135 basis points to reach 11.2%. The cost of goods sold showed a marked improvement, reducing by 260 basis points thanks largely to lower ocean freight costs. However, selling, general and administrative costs for the period rose by 125 basis points, driven primarily by higher incentive costs and store wages. Ross also repurchased 2.1 million shares of common stock at an aggregate cost of $239 million. Looking ahead, the fourth quarter guidance predicts a cautious yet positive outlook. Same-store sales are expected to rise by 1% to 2%, and earnings per share are projected to be in the range of 1.56 cents to 1.62 cents. Despite facing macroeconomic volatility and geopolitical uncertainty, Ross maintains a cautious yet optimistic outlook for the fourth quarter. For more information, the description is below to join a community of like-minded traders.
Arieous Invest. Trading reimagined.